All right, guys, I am going to be going straight to what I'm going to talk about. No music today. Let's not waste time. I don't know how long I'm going to be on here for, but let me okay, give me Okay. So, yes, welcome to another live stream. So this one, the purpose of this one, I'm just gonna go straight forward to it. Hopefully it's gonna be less than 45 minutes. So that's what I'm shooting for. So I know most of you gonna, hey Lionel, what's up? So most of you gonna watch later on, and yeah, let's get to it. So now this article came out about 2 days ago, right? Since the 12th. And I've noticed lately, right? Of course, they've been pumping one stock, one particular meme stock, right? And as we all know, AMC and GME has been like kind of in tandem, right? So now that they run out of juice in AMC, guess what they're pumping right now? Now, I'm not hating on this stock at all. Of course, like I own it as well. I'm not telling you to buy or sell or anything like that. I'm just telling you the comparison between the two. So, and the stock is, as you could probably tell, is SoFi Technology. SoFi Technology is a banking sector, right? Of course, these two stocks are different in industries and all that stuff, so it's hard to compare the two. However, when it comes to meme stock, right, these are not meme stock, you guys. Like, the reason why they say those things is because they want you to associate SoFi with Jimmy, right? Which is, it's stupid at this point in time, right? Really, they think that well, I understand why they want to do what they do, is to kind of lure more people in to fall into this BS trap, right? It's like, oh, forget about GameStop. How about this one? It's much better, right? So, but anyway, so again, I'm not knocking on SoFi. I think SoFi has the potential. I just don't think it has that poise of potential as the aspect of it, or the meme status is still with GME. They just don't want GME to have any kind of light of day in terms of like news media coverage or anything like that, in order to kind of again kill the momentum of GME going up. And I'll show you why I think that is the case still. But anyway, so let's get to it. I'm not going to read the whole thing. I'm terrible at reading, the straight through. You guys capable of doing that yourself. However, I'm just going to point out a little bit of numbers here and there. In here, it says that the company, SoFi, of course, operate on a brick and mortar branches like sorry, this company has no brick and mortar branches like JP Morgan, Bank of America, and Capital One, for example. The business has built with technology as a key focus from the start, which is true. I use the app, I use the service, and it's really fast and efficient. And you could buy crypto, you could, do all kinds of stuff in SoFi. Okay. So it's just telling you what is going on here. FICO score above 744 with the average income of greater than $167,000. And of course, they're going into like what SoFi is doing, what product they usually it's just student loan borrow and personal loans and stuff like that you could get from there. There's also encouraging it's also encouraging that the number of products that a typical customer uses has gradually increased over time. That's true. Let's see, what else are they? So this is the price of the stock. Of course, it went down to, I think, $5 at one point. So that's when I bought some in as well. But again, I've been buying like since 14. But again, adding little by little into this stock. So full disclosure, I do have this stock. I'm not telling you to buy this. A strong performance, which I've been following them as well. All of these are true. Okay. Now, I think this is kind of overhyped because the gain has already been 46% already, and it's outperformed NASDAQ by 30%. So in my opinion, it's already run. It's already been kind of overinflated already. And at one point it went up to like $14, and then they dropped straight back up to where it is now, like around $7.50. And so, I think it was the earnings. Apparently they beat expectation, but they still wasn't pulling profitability. And at the end over here, they said, should you invest $1,000 into SoFi? And they said Motley Fool advisor analyst team just revealed what they believe are the 10 stocks are to invest right now, and SoFi is not one of them. So if SoFi is not part of this 10 best stock to invest right now, why are they writing articles about how this is the meme stock to get into? You see what I mean? So to me, they're just trying to lure people into this particular stock, and perhaps just to trap them, right? And or to drive the volume away from the real meme stock there is. I mean, I say that, but I hate it when they call it meme stock. GameStop is the king of all memes, right? But for some reason, they tell you to forget about it. So today's trading was pretty good, as expected. I was like, ooh, $12. I kind of know that it was kind of bounced there, but again, I was kind of jaded on the price action there, but it went like 9% at one point, and then it dropped back down again. So they try to cut momentum out again. I'm not saying it's going to come down from here or anything like that. So the price, it's hard to expect where it's going to be going. But if you're a long-term investor, you shouldn't even worry about that. Okay, so let's get to SoFi real quick. Now, I'm going to make a little bit of an unfair comparison here because, again, SoFi hasn't been in the radar of like the meme stock status, right? So it's hard to compare to GameStop. And also, too, again, these are two different industries, so it's hard. Again, it's, somebody's going to write on the comment, going to be like, why are you saying it's not logical to compare these two. I get that, but there are some metric that you want to kind of you can compare to, like debt to equity ratios and all those stuff. So that's why they have these stats, right? So for you to kind of get into. Okay, let's go overall. Of course, overall, if you look at the net income, it's like not anywhere near GameStop, right? Revenue over the year, this is trailing 12 months, you guys, $1.9 billion. So compared to GameStop, Did you remember what GameStop do? $5 billion. Okay, in sale and revenue. Okay, I understand the profit margin is probably different. So, okay, let's go look at it together. Inside ownership, pretty high, higher than any other stock that I've looked into. So pretty respectable. That's good to see. But look at what GameStop does. We all know that inside ownership for GameStop is a lot higher. Institutional ownership, low. That's somewhat good, but GME is lower, meaning GME is poised to run much more than SoFi. What else? They point out that SoFi does have high interest. This is what I see. Of course, again, this is a kind of 2 weeks old data, so it might come out a little bit different or significantly different than this. But since I have no other way to get the data, I'm gonna go with this one. But if you look at the short interest for GameStop, it's 22. It's been 22, it's been 21, it's been 20 for a long time. And, it's been, of course, this is short reported interest, self-reported. So it could be a lot higher than this. But in comparison, anyway, and then you have a forward ratio of 200. This is for SoFi, by the way. Forward ratio of 284. That's massively overvalued right there. And then you have price to sell of 3.65. Price to sell for GameStop is less than 1. Now, price to sell, you want it to be lower than 1, right? Let's see, what's the good price to sale ratio? Okay, so again, not a financial advisor. My best education is from Googling things, so please be advised. Don't make any trade based on what I say here. While ideal ratio depends on the company and industry, yes, the price to sell ratio is typically good when the value fall between 1 and 2. A price to sell ratio with a value less than 1 is better. Okay? This is what Google is saying, so it must be true. Well, this is the definition of price to sell. So what does GameStop has? Less than 1. Okay? Book, price to book ratio, 3.1 right now. It used to be 4, so it's even cheaper. Price to cash flow or free cash flow, okay. It used to be 17, now it's 15, even better. PEG ratio, less than 1. This is GameStop, by the way. So let's go to SoFi, not even exist. Price to sell, remember, between 1 to 2 is good. So it's over 3. So it's not good. Right? Price to book, that's not too bad. Less than GameStop, so that means that they have, on a book value point of view, GameStop is worse, sure. Anything else? Okay, 1 second. Okay, sorry about that. So, debt to equity ratio for SoFi, 1.2, so that means they have more debt than shareholder equity. That tends to be a tough thing to kind of when you have more debt than shareholder equity, there's a risk of, going under. But again, if they have cash on hand, look, $3.3 billion cash on hand, total debt of $6.3 billion, net cash position is in negative. So I'm not saying they're in immediate trouble here, but it's no good to see the cash position negative like this. If you compare that to GameStop, obviously they have immense working capital right here. Working capital, okay, you have amazing debts right here. Not even like non-existent almost. But if you were to kind of minus cash on hand with the net cash position, it's stellar, right? Net cash is still positive, so that's good. They're not leveraging themselves. Free cash flow for GameStop, look at this, in the positive, right? But let's look at SoFi real quick. Look at this. Free cash flow, $9.5 billion in the negative. So of course they want you to buy into this company right now, and telling you to forget about GameStop. It's already run, right? GameStop already run. BS. On top of that, look at the gross profit margin and profit margin of negative 19. If you compare that one to GameStop, look at this. Gross profit, yes, we're still working on it to increase that one. Last time I checked, it was 27. Now it's 23. This is I think it's annual, trailing 12 months. But look at the profit margin for GameStop. It's less. It's negative 1%. Say negative 2% versus negative 20%. Okay. So GameStop is better. If you want to invest in the original meme stock, GameStop is the one to do it. I'm just saying that's what I would compare to. Okay, what else? I think that's all I have for this one. It's gonna be a short one. Sorry. Lina, what's up? Yes, I have that. SoFi is. Wait, was it up today? I don't know. SoFi. Hold on one second. Let me check. I don't know if SoFi is up because I wasn't even looking at it. Okay, so yeah, SoFi was up today, kind of running, and I'm sure it's probably they're gonna try to peg it to GameStop too. There's a reason why this article comes out, to kind of give people that impression. Do you think GME will run up before Christmas? Well, that's a $1 million question, huh? I know. I don't know. I mean, what do you think? What do you think? Be Christmas coming early. But yeah, I mean, it would be nice. But I don't think it's going to be like the run of a lifetime or anything like that. I think they're going to try to, again, like keep GameStop as flat as possible to kind of fatigue people out of this stock and to at least give new people the impression that GameStop is not a good buy. and keep the price as low as possible. So, but I see that as an opportunity to accumulate. So let's see what's. Oh yeah, forgot. I do have more stuff. Okay. So, this is the one that I used to kind of report on. This is the short interest data. So this one is kind of tell you what's going on in the daily trading. Today's price, after hours, and all that stuff. So you could see that one. I noticed that the short interest as far as shares is kind of increased over time, around 3 million shares being shorted here. It used to be 57 million, I think. Now it's up to 60 million shares being shorted again. So, and then guess what too? 17 days to cover, right? But if you look at SoFi, and of course, I showed you this one already on the other channel, not a channel. I was going to say channel, but website. But if you look at this one, now I was unable to see the amount of shares being shorted. But if you take a look at the percentage over here, 13%, I think 13.78% shorted, right? But look at the day to cover. It's only 2 day to cover. And of course, like, if you look at SoFi coverage recently, they always like pointed out, oh, look at the short interest. It's so high and it's poised to kind of, do a short squeeze here, so many days to cover and all that stuff, right? But they don't really compare that to GameStop. GameStop is much higher in every aspect of the of any type of stock trading, right? Look at the off exchange for SoFi is only close to 40% there, but look at GameStop, 65%. So you're telling me which one is more poised to run? It's like, are you telling me that GameStop is not a buy, but for some reason SoFi is now the meme stock to buy? Come on, it's kind of obvious at this point in time. But for those of you, who love SoFi, I mean, I have nothing bad to say about it, right? But compared to GameStop, there's no match here, right? So that is that. That is that. Oh, that's another thing too. So NASDAQ, right? If you look at NASDAQ, obviously, they give you a whole bunch of stuff, right? They give you short interest, they give you average daily shares volume and stuff like that, right? Boom, boom, boom. This is for SoFi. But if you look at GameStop, let's see if they put it up here. Zero. Why? Why the heck wouldn't they not put anything for GameStop? And it's kind of suspect, right? It's suspicious in the way that they do this type of thing, because why discriminating against GameStop data? Give it to us. It's ridiculous. This is dividends, financial. Let's see what NASDAQ is doing here financially. Earnings before tax, income tax, net income's still in the 300 million loss there. There's no updated information at all. Why? Is this even current? Okay, hold on. It's ridiculous, but I hope they will update soon in 2 quarters recording. Kind of curious to see what they're gonna do for this particular one. So they do have the expected reported. Okay, so they at least they put it out there right here. Q2. Okay, hold on. Reported 0, reported Q3. So Q2 2023 right here. Okay, and Q3 2023. It's not even up yet. Why are they posting it here? Unless I'm reading this wrong. Q4. Q1. It's weird. I don't know why they post it here when it's not even reported yet. Maybe they know? I don't know. So fiscal year for this one. And again, I'm just looking at Gamestop right now on NASDAQ. It's weird that they don't have, hold on. Let's see, insider activity. Of course, we only, see a few ones over here. Sell, because of, various reasons, taxes or whatever they, acquisition, open market. So usually acquisition means buy, perhaps, or awarded shares, maybe. So far we have those buys order from Larry Chain, Adam. I can't even, it's hard to say his name. Alan. Adel. He should change his name. It's just hard for people to even pronounce that. No, I'm kidding. I am kidding. So yeah, I mean, those buys are pretty recent, and those sells are usually for tax purposes only. How do I know that? It says on there. So go to the SEC filing if you want to verify that. Option chain. Ooh, let's see what's going on here. So the 20. Okay, so there's a lot of open short interest right here. Is it long interest? Short interest. 24. Okay, so this is for this week. So this week, don't know how to read this, but open interest over here. This is the largest one, so I bet you anything they're gonna try to keep it below $13 this week. How do I know that? Well, this is the largest one, so they usually want to kind of capture. Remember the max pain I talked to you about? But this could change again. Like people could just jump in and buy a whole bunch of calls or buy a whole bunch of puts. Now this one, open interest, now is at 11. Hold on. I need to learn more about that, but usually that's what it means, like the supporter or resistant, right? Again, like they don't want all of these contracts to go in the money. So what do? They would make sure that the price sits right in between that, so that not many calls option in the money. And seems like the price too, it's kind of high when you want to buy like into option. I mean, I don't recommend anybody buy into options because again, it's like gambling. Like, and of course the house knows what you're betting on. So what's the point? It's better to just buy into the company and hold it for a long term, you know. So you don't care about all this price action, what's happening day to day and all that stuff. So what else? All right, guys. I know some of you just joined in. I'm sorry. I'm not gonna stay here too long today. But yeah, I hope you get some value out of this. You know, to me, in conclusion, I just think that, you know, and we all know this. The reason why they write this article is to steer people away from GameStop and into something, right? It used to be into AMC. Now they're pushing SoFi to you. But if you do the comparison, it's night and day. You can't compare it to GameStop. GameStop is solid. GameStop is going to win. GameStop is everything, right? So, yeah. But that's just my opinion, you know. Form your own and do your own research. And then you might come to the same conclusion or different conclusion. That's on you. So, all right, guys, that's all I have. Thank you so much for joining and celebrating my 100 subscriber today. So just stay flat on 100 subscriber. I appreciate you, each and every one of you who jump in and tune in. So I will see you tomorrow.